As we come into Wednesday, markets remain in a holding pattern ahead of the Federal Reserve decision, with investors focused less on the expected outcome of unchanged rates and more on the guidance accompanying Kevin Warsh's first meeting as Fed chair. In FX, the US dollar has softened modestly as geopolitical concerns ease following the interim US Iran agreement, while the yen remains under pressure despite the Bank of Japan's latest rate hike and stronger domestic data, keeping intervention risks alive. The euro continues to draw support from expectations for one additional ECB rate increase later this year, while the Australian dollar remains underpinned by the RBA's persistent inflation concerns. Across equities, U.S. index futures are modestly firmer after Wall Street closed cautiously in the previous session, with investors reluctant to extend risk positions ahead of the Fed despite ongoing enthusiasm around the AI theme. In Asia, Japan's Nikkei pushed to fresh record highs on the back of robust semiconductor demand and improving business sentiments, while Chinese equities lagged despite Beijing unveiling a 300 billion yuan bank recapitalization program and renewed efforts to address local government debt risks. Commodity markets continue to be driven by developments surrounding the Strait of Hormuz, with oil prices extending their retreat as traders increasingly price in the gradual restoration of disrupted supply flows following the U.S. Iran Memorandum of Understanding. However, the logistical challenges of reopening the route, including insurance constraints and hundreds of vessels still awaiting passage, suggest energy markets remain vulnerable to renewed volatility. Against this backdrop, gold has remained relatively supported as investors balance improving risk sentiment against lingering geopolitical uncertainty and the prospect of a more cautious message from the Federal Reserve. That's all for now.